The Federal Reserve Bank pushed mortgage rates to a new record low not once, not twice, but 8 times in 2020 by August. So if you're wondering why they're doing this, how it affects you, and how you can capitalize on low interest rates, you're in the right place. What's up everybody, I am Jaspreet Singh from theminorityMindset.com and welcome to The Minority Mindset. If you bought a home in the 1980s, you'd be paying 12, 13, maybe even 18% a year on your mortgage. If you bought a home in the early 2000s, you'd be paying 7 or 8% a year on your mortgage. But if you buy or refinance your mortgage in 2020, you can be paying less than 3% a year on your mortgage or your refinance. Low interest rates aren't always good news for banks, but low interest rates can be great news for you, consumers, because that means you can borrow money for dirt cheap. If you took out $250,000 to buy a home and you got a 10% interest rate over 30 years, then it would cost you something like $800,000 to own your home. If you could get the same mortgage at just 5% interest, now it's gonna cost you around $500,000 to own the home over 30 years, so you could save $300,000. But if you could get that exact same mortgage at 2.8% interest, which is what many people are paying at the time of me recording this video, well now you're gonna pay less than $370,000 over the course of your mortgage. So Americans are able to save a lot of money right now by taking out a new mortgage for very cheap, or by refinancing the current mortgage at a lower interest rate. Just make sure you don't stretch yourself too thin. Understand what you can afford. So if you're buying a home, just take out whatever you need to buy a home, and if you're refinancing, take out whatever you need to pay off your current mortgage. That way, you use this cheap debt as an opportunity to build your wealth and get out of debt faster. Don't use this as an opportunity just to take on a lot of debt so you can look rich, because the only person that becomes rich when you do that is your bank. In this video, I'm going to be going over why the Federal Reserve Bank is pushing interest rates and mortgage rates to new record lows and how you can capitalize on this, and I'm going to go over what might be coming in the economy. So make sure you watch this video until the end because you don't want to miss any of these key details. But before we get into that, hit that thumbs up button below, because if you don't, well, the way the YouTube algorithm works, YouTube will be less likely to show you any of our other financial news and education videos. The United States is in a recession. I know it might not feel like it because the stock market is booming and people are buying homes like crazy, but we are. The reality is restaurants and retail stores around the country are shutting their doors for good. Airlines are running out of bailout money, so they are begging the government for more free money to prevent mass layoffs. And tens of millions of Americans are still out of a job even though the economy is open. There's a lot of free money floating around in the economy right now, and the government and the Federal Reserve Bank understand, or hopefully they understand, that our economy needs to start functioning and running on its own without the help of free money so we can get out of this recession. The Fed, which is known as the Federal Reserve Bank, isn't actually a government entity, but they work with the government to control our money. One of the ways they do that is by controlling interest rates. Spending fuels the economy, okay? So when we are in a recession and people stop spending money, the economy slows down. That's when the Federal Reserve Bank will cut interest rates. This way borrowing money is cheaper, so people will go out and borrow more money, and that way they have more money to spend, because if people are spending more money, this is going to stimulate the economy and get the economy moving again. If you've been subscribed to our channel, this is the obvious part. And if you're not subscribed to our channel, well, you should do that. But what's interesting is that the Federal Reserve Bank doesn't have much more room to stimulate the economy because interest rates are already near zero. So what's coming next? To understand that, you need to understand how economic cycles and interest rate cycles work. Just like how our economy moves in cycles, interest rates move in cycles too. Every decade or so, we see some sort of economic crash or a recession. Now, this doesn't have to be a major economic crash, but we do see some sort of recession every decade or so. We're seeing one right now in 2020. We saw one in 2008, we saw one in 2000, we saw one in 1990, so you get the idea. These economic cycles make the economy kind of look like this, but they're actually oscillating upwards, because every time we see this economic cycle, the economy grows a little bit, and then it shrinks a little bit, and then it gets bigger, and then it shrinks. Well, these small economic cycles actually lie on top of a much larger interest rate cycle. Each economic cycle lasts about a decade or so, which is why everybody knows about it. But these interest rate cycles only cycle once every 50 to 100 years, which is why most people don't have a clue that it even exists unless you're a financial nerd like me, because it's so slow moving. Well, now it looks like we might be nearing the end of this long-term interest rate cycle. Interest rates were hovering around 0% in 1930 during the Great Depression about 90 years or so ago. After the 1930s, interest rates went up until the early 1980s when interest rates peaked right around 18 or 18.5%, and then after the early 1980s, interest rates slowly went down, and then they hovered around 0 during the 2008 crash. They went up a little bit, and now in 2020, interest rates are back down to right around 0%. The reason we've been seeing interest rates come down over the last few decades is because every time we see an economic crash, which happens every decade or so, the Federal Reserve Bank has to cut interest rates to stimulate the economy. So the economy recovers, and then something happens and the economy slows down, and that's when the Fed cuts interest rates, and this happens for decades, and now in 2020, we're at near 0 interest rates. This puts us in a tricky situation because the Federal Reserve Bank can't stimulate the economy anymore by cutting interest rates unless they go negative with interest rates, but I'll be talking about that in just a minute. However, for you, these low interest rates can be great news if you're thinking about buying a home, or if you have a home and you want to refinance your mortgage, because now you can get a new loan for dirt cheap, and you can save thousands, if not tens of thousands, or if not hundreds of thousands of dollars on your mortgage, depending on how much money you owe and what interest rate your current mortgage is. So if you were thinking about getting a new mortgage to buy a home, or if you were thinking about refinancing your mortgage to save money on your mortgage, this is a great time to do that because mortgage rates are so cheap. Just make sure you shop around because some lenders are going to charge you a lot more for the exact same. The Federal Reserve Bank is in a tough situation because interest rates are already near 0, and so they don't have much wiggle room to stimulate the economy with interest rates unless they go negative. Negative interest rates, in a nutshell, mean that banks would be getting paid to borrow money. I know this is really weird to think about, but that's what happens. Banks would be getting paid and incentivized to borrow money to make more loans. This doesn't mean you'd be getting paid to borrow money, but your bank would be. This negative interest rate economy is possible, but so far the Federal Reserve Bank keeps saying that they do not want negative interest rates. What the Fed says is that instead of us printing money and giving this money to banks through negative interest rates to incentivize them to give loans, we will print money and give it to other institutions that are not banks. As a little bit of background information, the Fed is typically only allowed to print money and give this money to banks unless we are in some sort of economic crisis. Well, 2020 is the economic crisis. So the Federal Reserve Bank enacted some of their special powers. I know it sounds like I'm talking about superpowers, but that's actually what happened. The Federal Reserve Bank enacted some of their special powers, which allows them to print money and give it to institutions that are not banks to stimulate the economy. I've talked about this before, but one of the ways that the Federal Reserve Bank is doing this is by printing money and then using this money to buy public investments like bonds to inflate the price of stocks to indirectly get their money into the hands of people. The whole idea is if you own stocks, you are gonna feel richer and you're gonna be more likely to go out now and spend money, which would stimulate the economy. But if you don't own any stocks, then I guess this doesn't really benefit you in any way. So this is the Fed's way right now of printing money and stimulating the economy without going negative with interest rates, but I want you to pay attention to what's gonna happen over the next few years. There's a chance that we're gonna see more of a delayed pain from this recession because for all intents and purposes, many people are not feeling the pain of this recession yet. And for practical purposes, 2020 is an election year and no party wants to see an economic crash right before an election because that's not gonna help you get reelected. If we start to feel the pain from this recession later, you really wanna pay attention to what's happening in the economy because if we truly are in the end of this long-term interest rate cycle and interest rates start to go up over the next decade, then that could also mean that our economy will start to grow slower. I can't predict the future, but what I can do is help you stay up to date on what's happening in the finance and business world, and that's why we created the free Minority Mindset newsletter where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about our long-term debt cycle and understand how our credit-based economy really works, I already made a video on this and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.